This stock market analysis is coming right now. Projections on the S&P 500. First, it's this important information right here, and I think you're going to need to read this because it tells you about how we approach the market in our analysis and what that means for you as you apply it to your own trading and the important subject of trade ownership. You must take ownership of your own trades, on your entries, on your exits. That's how you're going to raise your probability of success. This is our special for this week. MCM Pro and Day Trader Services. You can get a free test drive. This started just this week. You don't need a credit card. You sign up absolutely for free, and you're going to get a couple weeks of using our great day trader service. So if you're a day trader, you're an intraday trader, you really have to see this. It's fantastic. You get our impulse monitor, which really shows you the what direction your likelihood, the most likelihood to get a big move in, a big impulse. You're going to see our whole cockpit with all of our apps in there, which you see right over here. That's our cockpit. And you're going to get our replay system where you can replay the entire day and just look at how you can improve your trade entries and exits based on that, and a whole resource training area. And the MCM Pro, I'm going to show you that in just a little bit. This is fantastic. You get to see when the conditions in all different trader styles change, and you can use our desktop alert app in order to be notified when those things change based on your particular trading style. And you'll get everything that's available in the MCM. So it's fantastic. I'll show that to you in just a little bit. You can sign up for that by going to askSlim.com or write Matt at askSlim.com for any information. This is the front page right there. You can see you go up here to test drive our tools for free, and you're going to be able to sign up for that. Yes, this is me, a picture of me right there, 1974, 50 years ago on the original CBOE floor. Yep, been at it for 50 years, and you can learn from my experiences, and as the entire team has, and we've developed these great applications to really improve your trading. So give it a try. A couple weeks free, no credit card, MCM Pro and the Day Trader Service. Go to test drive our tools. I know you're going to love what you see. Stock market analysis, S&P 500, SPX cycle analysis and projections. Level 4 indicators is what we're going to look at also, and you will also get a peek at our MCM Pro market condition monitor and how that gives important information. So let's take a look now as we switch over to the charts. So we're looking at SPX here, and I'm just going to show you that this is a weekly, daily, a daily momentum and a 2-hour intraday chart. This has our proprietary indicators on there, our option bias study on the bottom one here. This is our slim ribbon PO right over there on this daily chart, and here you have a market condition MCI, the market condition indicator, here on the 2-hour chart. I'm going to blow these up for you to see so we can see where we are and where we've come from and where we think we're going. All right, so this is the S&P 500. So what has happened in here is that we expected this declining phase right in here. Now, we thought it was going to be, 5% or so, but it was all practically double that as the market fell pretty hard. But perfect timing. You can see in here this minor cycle as it comes down right over here. That's what we expected. Now what's happened is that you can see here where the minor cycle came down, and the reversal scout stayed positive here. Minor cycle comes down, reversal scout stays positive. These are very strong cyclical conditions when you look at that. Here you see the minor cycle comes down in the middle, and you have a negative momentum change over here. That's bad. That says that the rebound is likely to fail in the resistance area. So the resistance is, it's right now basically at the bottom of the resistance right here. This is about 53.30. This area up here is about 54.70. So this is the range that we would expect that it would get into and fail. The midpoint right over there about 5,400. So if I look at it again, 5330, 5400, 5470 approximately, those are the resistance levels, and this is the zone that we expect it to fail in. So we're getting a rally, a pretty good rebound going on right now. As you see, the market was way down over here, down about 5% on the week, and comes back down to less than 1% down right now here at midday, as it had a good rebound. But the upside potential is not very good right now. And this big decline came as the yen was exploding to the upside, and we expect the yen to remain volatile. There will be days when the yen is panicking to the upside again, and you're going to see our stock market moving down sharply on those days. But still, we likely are moving into this rising phase right over here. Now, we had originally thought, as I said in the beginning of the show, that the probabilities were pretty good that during this rally it was going to get back up into this resistance area here. However, that's changed, because when you have this break that comes down to the 78.6%, it's a warning. And that says the next rally is very likely to fail in the resistance area that you see right over here. Then what happens after that is that the probability is very high that this cycle, when it gets into the declining phase, now this is the midpoint over here, late September, I don't think it's going to last there. I think it's going to be what we call a left-hand translation. So the peak is on the left side over here, and then moves down. But even if it's over here, it doesn't matter. We're going to get into the period of risk, and the probabilities of taking this low out, and substantially, are very high. So that means this rally is likely to fail, and this period over here may get you a decline of some significance. Now, this is 4832, which is the monthly 38.2% level. Very important level right there to look at. Still, when you look at that, that would be a fairly big percentage of loss, and the potential to get down to 4574 is pretty high, and that would probably be close to a bear market reading were that to have happened. So this is that big period of risk, and coming into the election time, and with the choices of our election and what's likely to be going on during that time frame, I wouldn't be surprised to see investors very, very nervous. So between the yen problems, between the market valuations, between the election, all of that, this is a very big period of risk, September through November, as we have it listed here. High probability of a failure in here, and then moving sharply to the downside. To me, this rally that we're in right now, and in this zone over here in this next month, are selling opportunities for investors and for active traders. Now let's move on as we move from here of the weekly, which again, your picture is you see negative momentum right over here, to the daily chart. Now, what we do in the daily chart is we build what's called the slim cloud, which is really putting in two channels. When it's, moves into the upper channel, you kind of know that decent amount of strength came in. If it moves into the lower channel, well, then you know that, well, that strength is failing. And this is a very similar resistant zone that we saw on the weekly. Here now getting into the bottom of that resistance. Again, this level up over here near 5,400. And it's very possible that it's going to make it to 5,400 in the next few weeks. Now, you can see in here that the option bias indicator is negative. And it had a bottom warning. It got to super oversold right in there and called for a bounce. And we're getting that bounce in here. If you look over here where this was all green, this said bias your option trades to the long side. This is over here is now saying bias your option trades to the short side. In other words, dips are buys in here, but rallies are sells right in here. When it's neutral yellow, you can barely see that, but here was a neutral area right over here where it was just changing from positive to negative. And right now, the option bias indicator is negative, and it is saying that it's pretty likely that the rallies that come into this zone up here are going to fail. That's around 5,330 to about 5,400 at the outside, 5,460, 5,470 up in that area there. You see the note here. This cycle has a high odds of being the first daily cycle in the new rising phase of the minor weekly cycle. So odds favor a positive configuration. A negative configuration would be very bearish. Now let me decipher that, tell you what that means. You can see in here that we're in the beginning of this rising phase on the weekly chart. Here we have that upside movement in here. So since you're early in that weekly pattern, even though everything is negative, it's fairly likely that this cycle will end up higher than it started. So it started over here at 51.17. It's pretty likely, with all the gyrations that go on in here, that this will give you a positively configured cycle where it ends up higher than this level right over here and never gets below it. If it gets below 51.1926, it's going to be a horrible message, a very negative message. And were that to happen, it would tell us that this weekly condition over here is so negative it will not allow much of a rally, and that it is likely to decline in some severe way. We're going to look for the highest probability for it to fail up in here, pull down over here, make us get some support without making a new low, and then the next cycle over here get back to the upside and move into this mid-September period where that ultimate rebound peak is likely to set. Not likely to be here, it's more likely to be in this next cycle. So this analysis with negative momentum in here but positive cycle action here says to me range trading is likely to happen. Rallies fail, dips fail, it trades in a range, and trend trading is probably not the right type of trading unless you're using our day trader, which gives you intraday trends, which is what really you need to look for. So this is a look and the explanation for why we're probably in a range trading period right now. So that's what we have here, negative on the option bias indicator. And when you look here at the daily momentum, you can see that the slim ribbon PO on the bottom giving you all of these resumption signals for momentum right in here, and was green during this whole period and then turned neutral and now has turned red. You very often get failures when you get up into the slim ribbon right here, as you see happening right now. So there probably is not a lot of upside in here. And the top of this, which is the 21-day moving average right there, is 5,400, which is right in the middle of that resistance area that we talked about. Very high probability rallies will fail and then be moving back to the downside again trading in that range. And when I go to the 2-hour right over here, this is our MCI, market condition indicator. And when it gets, it moves between plus 100 and minus 100. Again, this is a level 4 indicator. And when it gets to the 25, it's a test. And if it were able to cross under the minus 25, it says that the longer term inputs are negative. It's giving you a negative signal. Right now, it's been able to hold just above that minus 25. So it's not quite giving us the signal yet. So right now, this is neutral. But if this then moves underneath the minus 25, that's going to be a negative signal for the stock market. So again, we'll move back through this, just starting an uptrend in the minor cycle, momentum negative, likely to fail in this resistance zone. On the daily, negative as far as looking at the option bias indicator. And again, very likely to fail in the middle somewhere in here of this right over here. Negative momentum conditions as clearly seen right over there. That is a look at the SPX and that analysis, which says be careful because the upside is not likely to hold. And there's a lot more downside risk than there is upside potential. It just, right now, it's probably more neutral than anything. Let's take a look here as we look at our market condition monitor, the MCI. Now, if you're brand new, you can get, earlier in the show, I told you how you could get a 2-week free peek at this, no credit card necessary to use it. It is an unbelievable application. We built in our algorithms in here, and you can see in here as you look at the S&P 500, QQQ, IWMDAI, and right now the settings that are on here I have on short term. So this says on the short term, you're kind of neutral on the S&P 500 and the QQQ. See that up arrow, that's the improvement. And this gives you the change log, and here is when things change. You can see that. So you have very much neutral conditions. The IWM, which was stronger before in the short term, is now bearish. If you're an intraday, if you're a swing trader over a few days, that would be the near term right over here. So you want to kind of dial it into your trader style, and you can see in here that you're kind of slightly neutral to slightly bullish on the S&P 500, the IWM. And in the diamonds, you are, slightly bullish to neutral. This is not, not anything that's really giving you anything really tradable when you look at this, because they're kind of neutral. They're not really giving you anything, and that's what I would expect based on the analysis that I'm seeing right now. Of course, if you're an intraday trader, that's right over here. And right now you can see that, you get a market that's trying to rebound, so it's giving you bullish index. But this is all intraday, so this is only for day traders right now. And then this is the weeklies on the intermediate here, weekly out to monthly. And you can see in here that you're neutral to slightly bearish. So let's go back to the short term here, and let's just look at some of these conditions in here in some stocks and see which are the best, which are the worst. Here's your very bullish ones in here right now that you can see: BABA, XLP, TMAS, XLRE, XLU. Of course, all the money is going into the utilities because of a flight to safety. So these are the ones that are very bullish, and these are the ones right over here that are very bearish. Corn, soybeans, Disney, we've seen the problems that has. This is the solar stock ETF, as you can see right there. I'm just going to scroll down a little bit here so you can see the ones that are bearish. Katie did a bearish trade in Visa today that you can see. So this is an application that's unbelievable. And on top of that, you can download our alert application, our desktop application, and you can just ask it to notify of when you want it to tell you when it's very bearish, neutral, any of these, and any of the time frames when you dial in your own trader style in those time frames, and then it will alert you right on your desktop as to when those things happen. So you don't really have to monitor everything because our system will tell you when things happen. So that's looking here at the different trade setup conditions in here. You can also get the time frame view where you look at the individual time frames right here. And these are the conditions, as you can see. In the 2 hour, it tells you when those conditions have changed right there, and here's your daily, as you can see there. So you can just see the conditions in here, and look for the S&P 500, QQQ, IWMDI, Apple. They're all negative when you look at that on a daily chart, so don't be surprised if these upside rallies begin to fail. That is a look at the market condition monitor, the pro version, which you can try out right now simply by going to the top of our website, click test drive our tools for free, and you will then be able to sign up for a couple of weeks free on this and our day trader, which is just fantastic. So that's a look at that. This is a look at the stock market that we talked about. And overall, we're looking for stocks to be range bound, have some good upside pops that fail, some good downside moves that don't stay to the downside, and a choppy market, I believe, going forward here for maybe a number of weeks.